Good morning, everyone. Welcome to a new market update of Michael van der Poppen, also known as Crypto Michael. And today we're just going to go through the markets, through crypto total market cap, just getting away from all the insane FOMO on the charts right now and just have some perspectives, some discussions, some views on the markets in which we can discuss and see where we're going from here and what's most likely happening. Before that, if you like my content, please subscribe to the channel. We're growing relatively fast and my target would be 20k subs at the end of this year. Would be quite nice if we are getting it. So please click on the bell, subscribe to the channel. Also like the video, comment beneath if you want to see some special content. Right now I'm providing daily market updates, but we are working hard to improve everything on the platform that we have and on YouTube and Twitter to improve the content that we are posting and providing to all of you. The markets. And I woke up earlier this morning and I was like, the FOMO is insane. I'm seeing messages from people stating that everything below €1 or $1 on XRP is a buy. People are getting reached out by old friends that they want to buy crypto. Complete no-names are starting to become an analyst and saying that XRP is going to $10 and stuff, which are all pretty much heavy signals that we're getting into a slight FOMO period of retail, which is quite often relatively close to the top or intermediate top of the markets. But in perspectives, it shows you how crazy a market can be. The previous 2 weeks have completely surprised me with the breakouts on XRP and XLM. But I think it's just a breakout of a downtrend and the real impulse moves are still ready to be made. But are they currently interesting for entries? No, the nature of buying those coins heavily up is just not the nature that I do have. But if you want to buy something like XRP, XLM right now, you're probably only going to scalp trade it on an investment opportunity. I think, to be quite honest, if you're going to buy XRP, XLM on the levels they are right now, they are on these levels for the first time in two and a half years. So you've had your chances. You've had 2 years in which you were interested in buying those coins, but you did not decide to pull the trigger. But once it's up this heavy, you decide to pull the trigger. Why? Because you can't control your emotions. And you're getting told by all those people that you should be buying those coins because they're going up to $3, or in the case of XLM to $1 or whatever it is right now. That's retarded. Just listen to what you're thinking, listen to what you are feeling in that period, listen to why you're experiencing right now what you're experiencing and the FOMO in general, but never ever decide to listen to it. If you miss the pump on XRP or XLM, who cares? There will be plenty of opportunities on the markets. XRP and XLM are stealing the show right now, but many altcoins and many great and decent projects are still not moving at all. And the majority of them will provide those retests that we want. And then probably nobody is going to discuss the entries at all. But that's the moment you want to get interested in cryptocurrencies or in those assets. And when it's up like 4, 5, 6x, you should be taking profits, regardless of what everybody is saying with their targets. I do remember from this peak high in December 2017, I was expecting Bitcoin to drop somewhere in this region. And yes, it went up 10-15% more. Who knows? But in this area, people were only expecting crypto to run to 40-50k, regardless of the fact that it's just an insane bubble back then. That will happen again. Every time when something runs heavily and the indicators and oscillators are in overextended moves, people will find arguments to believe that it's going to run further up. You should not be caring at all. Why? It's all about your portfolio. Unrealized profits are not realized profits, and they are only becoming realized when you liquidate your positions. And if you have been in these markets in the past 3 years, you know that what goes up must come down to test levels, especially in altcoins perspectives. So that's just the monologue that I wanted to share. I hope if you like this, please share it to your friends. Yeah, that's what I wanted to share on that perspective. But the markets, funny thing, if you use the Fibonacci tool, is that if you take the low and you take the all-time high, if you take the low and you take the previous high, which is the same essentially as this one, the 1618 Fibonacci level, which is often used as the next target zone, is hit. And if you use the opposite of this Fibonacci tool and you use it for a retracement, the ideal retracement is a retracement towards the previous high, which is between 420 we blaze it, and 390 billion. If we get there and we make this support resistance flip, we get a heavy correction on the markets, which will probably put Bitcoin towards 14k. But that's the level that you should become interested in the market. If we reverse, and given that we have got some oscillators and indicators that are showing heavily high levels, and given that we are not in the euphoria of 2017, that's still to come in the next years. I'm expecting it to be happening in 2023. It seems very likely that we have seen already, just like the breakout we did previously, from 280 billion towards 390 billion. In which we probably chop around for a little bit here, and then correct towards the previous highs before we are going to see the next run in the next years towards new all-time highs. And then we get into price discovery phase, which is also amazing. But in general, I do not believe that we're going to run further. Of course, we can still run 10-15% more. ETH is showing some weakness in general. Bitcoin is also not feeding the breakout too much at this point. We might still sweep the all-time high, but it's all getting a little bit freaky. In general, if we're going to chop around for 1-2 weeks in this range, just like we've done previously, I think we're going to see the small and the mid caps doing relatively well, as they are lagging behind heavily before any continuation is likely going to occur. Then we've got our dearest friends, which is the altcoins in general. As we see, we've broken the resistance. We've flipped the area. Oh, that's not a nice line. We've flipped the area at 112 towards support. Now we make a breakout. Resistance area we are basically in, as this is the resistance zone we've got here. Support resistance flip towards the 160 billion level, and then the next rally should most likely bring us towards the resistance around 330. So most likely we're going to get a slight corrective move. Then the first quarter of next year we're going to extend that rally towards 330 billion, have some more slight corrections towards 250, and then the next runner is going to be the highs as well. So I think it's going to be relatively fast, that's for sure. But those levels I'm watching at this point. So first quarter of next year, I think we're going to make a double in the altcoin market cap, then have a slight correction, and then during the summer we will have the next alt season, which is, don't pin me on this line in general, but I think we're going to see something like this. BTC, smaller time frames, higher time frames, we see that we are at the all-time high, which is obviously the level that we are seeing as a potential reference point for people to take profits. Vertical, and when things go vertical, they crash vertical as well, and that's going to be harsh, that's going to be painful, it's going to be swift, in which I've got 16k and 14k as levels that should be watched. I think we're getting relatively close to that turning point, and we might be even experiencing it through the week. If we check the lower time frames, I've been squiggling a lot here, but what we can see is that the area that should be holding was the area at 18.5, preferably even the area around 18.7, as that's the previous high held. So we're continuing the grind. Once we lose this range, I think we can have a swift drop towards 17.2, and then the question becomes whether we are going to see further corrective moves. At this point we are holding, but as you can see, I don't know where the volume is. As you can see, volume is slightly decreasing, potential bearish divergence. Bearish divergence is only valid if we lose 18.6 to 18.8, as I have discussed in the video yesterday as well. Losing 18.6, 18.8, and I think we're going to see the drop down that we want. The bearish divergence is possibly there, so there is some stuff that you should be watching. And I think we're going to have volatility in the coming week in general. All-time high before it, who knows? I don't know. We're going to see it. I'm taking partial profits, and then I'm going to use that liquidity to buy the dip again. Thanks for watching today. I'll be back tomorrow with a new update.